All right, guys. So Jerry Fetta here with my good friend Tony over at Equity and Help. So what we're doing today is actually pretty exciting. I'm going to be buying one of my properties with Equity and Help, and Tony and I wanted to give you an inside look at what that is like, give you all the details, and that way you can see as an investor, as a philanthro investor getting started with Equity and Help, what's the process, and what is everything like. So Tony, go ahead and let's just jump into it, just like most investors would get from you on a meeting like this.
Thank you so much, Jerry. First of all, always we would like to meet and know a little bit more about each other. I know that that's the first thing that I always do with our investors, just so they know a little bit more from me. Because at the end, investors, we turn out to be so close and friends. So we start initiating that relationship right at the beginning. And well, that's part of what I always want to know. Also, the needs and wants from the investors to see what are the goals with its investment. Obviously, the properties, the amount of net income that they're looking for in the future or in the short term. So in that process, I help them to figure out what it will be the best way in order for them to reach those goals and help them to figure out what is the planning with the investor. So that's basically part of it. I can tell you a little bit more. I'm going to tell you a little bit more about me, so you know exactly, what are the investors and how do I got here. I started here almost 3 years ago, almost 4 years ago. And when I first started with this company, one of the things that make me stay here, besides the great company that it is that I see all the employees working and the relationship that they have. Everybody's working toward the families. Everybody's working on helping those families. They become friends. We're not only collecting on the victim's family, so we create that relationship with them. And when I saw that at the very beginning for my interview and everything for this job, I was amazed on how everybody jump in and help you and the way that they communicate. So, besides that, it's just all the changes and the good things that we are creating as a company. So, all the impact that we're doing with families, the investor, the benefits. Then when I start working on here, I see all the philanthropy area from those investors that they are making money, but they're also willing to help. So when I first start looking at that, I say, okay, so everybody's moving to the right way. Everybody's working from the same cause. So that's basically part. I used to work before here, like with taxes and insurance. That was basically in my area, financial area. So I've been always like knowing a little bit more here. So yeah, basically that's a little bit about me. Just a recap for that.
That's awesome. And for those that are watching, if you don't know me already, I'm more than already a little bit involved with Equity and Help. We work quite a bit with Tony and his team. So I'm looking at doing a property today. But my history with Equity and Help is I was first friends with their founder Ivan. And so I read the book. I really, gravitated towards the vision, which is beyond just real estate investing. It really is about impact. It really is about helping families. It really is about improving communities. And I really just fell in love with that part of it. So I read the Philanthro Investing Housing book. I've seen the presentation. I've listened to several of the podcasts. Obviously, Tony and myself as the CEO of Wealth Dynamics, we worked a lot on different investments and different client cases. So I have a lot of familiarity with Equity and Help. But, for me, from the very beginning, I saw that this was unique and it was something that I wanted to be a part of as an investor and as a business person. Hey, you want to see a magic trick? Get a copy of my book, Blueprints Financial Freedom. I know it's in front of my chest and my face because I want you focusing on the book and not me for a moment before you go back to focusing on me and the content.
Nice. And we're very happy to work and to continue helping more investors to achieve their goals. So now we're going to look on the the proposal that I have here, just so you can see exactly, and all our investors can see when I present these properties, because we have a very good property. This is a specific property, a specific situation with the purchase of this property, because this property is already performing. It's a property that we have already a family on that property that is already on the land contract. They already put the down payment, and now they're just making the regular payment. So it's very good.
That's awesome. And so just to clarify with performing, usually when someone buys a property, it may or may not be performing yet, depending on if there's a family in it or not. So there could be, just for those watching, there could be a waiting period of getting a family in there first if a property is not performing. If it is performing, which is probably, that, would you say that's probably the minority circumstance? It's not usually going to be a family in it from the get-go like I'm seeing today?
Correct, correct.
Okay, so we're kind of seeing a special circumstance. This is probably the Jerry Fetta Wealth Dynamics favor, but I just want to clarify that because that's part of the system. It's part of the process as the properties get cleaned up, a family gets put into them, and so that's part of the onboarding and I would say the occupancy phase, which we're going to be seeing one that's already through that phase today.
Correct. And we had done this before, and we had some investors that they love it because it's already performing. But I just want to know that normally our properties are vacant, but very nice properties, and they have that period of wait. So here there's a property that is located in Johnstown, New York. It's a property that is located in New York. This property right now, the investor price. First of all, Jerry, all the numbers that we see in here are minimum numbers. And I will explain, like, as a proposal per se, when investors start looking on property selection, we're going to try to specify that and to let them know why these numbers are lower and, how we can get it higher for you guys. So this
Cool.
property and investor price is for 58,000. That's the purchase price of the property. We have the home sale warranty program. The home sale warranty is another layer of protection. If let's say, like, if by any chance or any case that property cannot be sold to a family during the first year, we will give you the amount that you paid for the property on a non-cash home buying credit, and that credit is used to continue purchasing properties. Here with Equity Help, it's a credit that when we buy back the house, but we're not only giving you the amount that you paid for the property, we also give you taxes and insurance that the investor covered during that year that the house was not sold. So that's another layer of protection. Almost every investor at the beginning, they always do it because it's just a minimum amount and the benefit is very big, to have another layer of protection in there. Here is the after repair value. Obviously, as you can see, you're getting the properties at a discounted price. Here, you will see the estimated family price. In this case, these are the minimum numbers that are going to be approved to sell to a family.
Mm-hmm.
If it's lower than that, we have to go with you and get your approval to see, okay, Tony, yeah, you can go ahead. Let's just sell this property, and then we move forward with the family.
Okay.
Here, you see that $1,000 down payment, that's the minimum. The majority of our families, they always work with $2,000 down, and then they finance the rest out of 12% of interest. In some cases, we put 1,000 here because in some cases, there might be families that are trying to put more money to the property right away. So in some cases, we can let the family, okay, instead of 2,000, we can let you start with $1,000 of a down payment because we know that the difference of that amount, it will be towards the property. So that's for the investor benefit because it's for the investor property. So in some cases, we let them allow. So that's why we always want to let you guys know that it can be an option. But we'll always tell you guys that, hey, the family is going to put $1,000 down payment. So you guys understand and don't receive a surprise, if anything, when you get the investor report.
I love that. Okay.
So let's see, for this example, it will be 65,539, the purchase price for the family, the minimum. They put $1,000 down and they finance the rest of the 64,000 at 12% of interest. That will give you a monthly net income of 645 with 64 and a cap rate of 13.4%. And these are good numbers, obviously, because it's a very good cap rate. But imagine that this property, it will be on the market around close to 72,000. It will be the property on the market. So if we sell this property for more of the PI approved price, obviously your monthly net income and your cap rate, they will be higher than the ones that are put here.
Okay, good. And then you said this one is already, is it already occupied or it's already in a land contract?
So this property, we have a family on a land contract. The family purchased this property 2 months ago, and the family did a larger down payment for this property because they were so interested and ready to move in. So the family
Mm.
did a larger down payment, and the family's already working to just keep making the payments like they should.
Okay, cool. So they've already purchased it for the 65,000 in this scenario.
Yeah, in this scenario, the family already purchased the property, and I have here, I will show you an amortization that this is the amount, the correct amount for the sale. You will see here an amortization schedule. This will be with the numbers that you're going to be having, Jerry. This house was sold for 68,000 to the family.
Mm.
This is your investor price. The family put 4,000 down for this property, and they financed the rest of the 64,000 out of 12%. That will give you a net profit of 639. This is going to be the monthly payment, and the monthly payment, total payment for the family is going to be 1,078. Obviously, they have
Okay, cool.
taxes, insurance, and our fees, and you will be getting a net income for 639 with 7.
Okay, good. And then I know these are on a 240-month amortization schedule, just with the amount of mortgage payments and the breakdown. Am I taking over at the point of the amortization that they're in now, or is that amortization resetting on more of like a refinance?
No, it will be the same amount that is on the principal, so it will stay because the sale was done. So you will just be carrying on that one for those payments. So
Okay.
the family is already scheduled. They have all the numbers, and they just have to continue making the full payment so you can continue getting the returns.
Very cool.
It
Okay.
will be like a difference between principal, interest, and the payment in total with the balance.
Okay. And you said they're about 2 months or two, what did you say, 2 years into it or 2 months
No, the
into it?
family just purchased the property 2 months ago. The family is now scheduled to make the first payment, so you will be getting all the interest on those properties from the beginning. This is just
Oh, good.
and this just was recently sold. They're just going to make their first payment now on this month.
Cool.
Mhm. So the
Good. That
benefit
makes
with this
sense.
property for you, Jerry, is that you will collect all the 240 payments. And instead, you will see that the pending principal balance is at 64,000. But
Mhm.
like we work with our investors, we always want to have like that, um, basically that part of your equity gain. So that's why
Mhm.
even though that the principal balance is on 64, we're giving you that extra cushion for you to purchase for 58. And that's what we do with our investors as well. So they have the
Cool.
option sometimes like, okay, I understand that the families already have a loan or it's already on schedule. So instead of giving you for the same 64,000, we always give you that benefit because if we put that property on 64,000 as your purchase price, and then if anything happened with the family, that would be way too high for you anyway.
Right.
So in this case, we will give you that so you have a very nice purchase price. And if anything, obviously, we don't want that nothing to happen with the family, but if anything happened, it will be very quick and easy to sell for a new family for another 20 years.
Cool. Good. So this is really, and I'm just looking at the numbers here for those watching. This is a really good cap rate. The income on this property, it was almost, was it 13.44%? Was that what I saw there?
Yeah, that would be the 13.4.
Yeah, so 13.4 cap rate. And it's not a huge upfront equity play, but the cap rate seems higher than some of the other properties I've seen. So I'm okay with that trade off as an investor, where I know, okay, this is a long range, partnership and investment, and I can be making that really good yield over the long range versus, trying to make a really quick equity gain, immediately, but the cap rate might be lower or whatever. So I see the differences there, and for me, that's okay because I'm mostly doing this for income, and so I really am interested in, okay, great, let's get a good family. It sounds like we have one. Let's get a good cap rate. It sounds like that's there, and a good purchase price as well.
And let me show you here so you guys can see a little bit more about our properties. As you can see, there's have all the information that is a 3 bedroom, 1.5 bath. We have 1432 square foot, and the lot size is 3,049. So you can see these are the kind of properties that we select. You can see the houses. These houses didn't need any major repair, or they don't need to have like a project to put like a kitchen or to put everything new, because the families just need to understand that that's the responsibility of the family. You as an investor, obviously, we would like to have all the houses ready to move in without anything or with any issues. But obviously, we have to understand that the family takes care of any situation with the property. You don't have to be taking care as a landlord with the family when anything happens with the property. The family is going to be calling you and, hey, I need you to fix it. No, the families that we qualify, the families are handy, are families that they understand the property. After they get qualified, they go see the house. They always come
Hmm.
with a plan on the repairs that they're going to be holding, or working on at the beginning, and they send us like a repair plan. And so we know that the families understand what is the situation with those properties. And also those families say like, that's not going to be an issue for the future, with family, with the payments, if there's any situation with the house, because we understand the house and we will take care of that. So just to give you an insight, because some properties, you might see that might need a little bit of cleaning or maybe some painting, but it's nothing. That's why it can be so easy to sell to a family, because for any family, they don't have a project. So they just have to do just minimum repairs on it.
Yeah. Yeah, this looks like a really nice house. Like it's I mean I've looked at many of them with you and the team with various investments and various clients, and this is definitely not much is needed. I'm sure they'll do a great job making it into their dream home and their happy home, but it's not like a huge cleanup is needed. Can you tell me a little bit about the family? Is it do they have kids? Is it what do they do?
They have three kids.
Okay.
The husband is a mechanic. He works with cars.
Hmm.
He have his job and he works as a mechanic. His wife is a very good family. They are a very good family. And
Mm.
he worked for a big company as a chief security officer. So he's a very good person on that company. He's such a
Hmm.
chief security officer. And they have three kids. They have three daughters. One have 17 and one 13, another one have 12.
Mm.
So it's a very good family. They are very happy with the house. They already like so happy, very grateful with us and with the opportunity. So that was one of the first things that they were like, when I talked to the salesperson that I talked, he said me, they were so excited, Tony. They were looking so hard to purchase a property, but they were not able to do it. And that's why,
Mm.
so that he have the opportunity, he jump in, we will take care, they send us a business repair plan, and they move out to the property right away. So it's a very good to help them, to help families like that, because uh when you hear them that finally they have achieved that dream, that they don't have to be moving from place or taking the kids from school to school to school and other places, and then
Mm.
finally have that opportunity is very fulfilled for us. So it was a very good family.
Yeah, that's beautiful. I love that. And one of the reasons that I love this program so much as a philanthro investor, Tony, is exactly that. There's a lot of ways to invest in real estate, and I grew up like that. We didn't own a home; we rented. My parents weren't people that would have ever qualified for a mortgage. So my childhood, my family was a family that would have been able to be helped by equity and help and by this model had it existed back then and had we known about it. So you've probably all heard the phrase, when the tide goes up, all boats rise, and that's kind of my viewpoint with this. Is I've seen various seller finance models out there and various ways of doing real estate investing out there, and unfortunately, a lot of times the attitude is, how do we make the most amount of money on the family? Even if it's not necessarily the best for them. And so with this, it's like, I'm going to make great money as a philanthro investor. The family, they're getting into a great home. They're going to have their lives probably changed by this. And so I'm not necessarily focusing on how do I squeeze the most out of people living in the house, because the investment is not just a financial one. It's actually an investment in creating more stability, more security, more wealth. And that's one of my missions, is to help good people build more wealth and make the world a better place. So this is an exact way of doing that. And I love the idea of how excited this family is to be in the house.
It's also happened too much in Christmas. They send us like a lot of videos. Look at our house when we first got it, and look now how pretty it is. So we sometimes have had them on one of our meetings with the company, and we just want to say thank you to everybody, and they just jump in a meeting with us in one of our company meetings, and it's very happy to hear them. It's very happy, and you go away that day from work like, this is great. So we did
Mm.
very good for a family. That's why we keep working on helping more investors to know more about equity and help and more families to be helped. So that's our
Mm.
mission, to get as much as families help in the country.
Amazing. Now, for a philanthro investor that is looking at getting a house like this, will they get updates on families? Like if there's a family in one of their houses that sends a good news video or there's a good report, is that something a philanthro investor is going to be kept in the loop on and be able to kind of celebrate those wins with the family?
The investor is always, we always have in communication with the families. If the investor, sometimes we have investors that say, hey, can you check on any pictures from the property, how the family is doing? We just want to know. Uh, And the investor can have that, all the information. If they want to know the repairs that had been done during that month, we can contact, we always got the communication with the family. We can provide that information for our investors as well. And it's good that you say that, because we have a few investors, like the other day on Christmas, they said, hey, Tony, family has been paying good. Let's just waive this payment. They're just making pay taxes and insurance because it's Christmas and they have been doing good. So I just want to give that for them. And
That's really cool.
when the family received that, it was like, oh wow, thank you so much and everything. Like, we were trying to make the payment, but now we have, for other things. So that's very good. We have other investors that when they want to help families, they even like, hey Tony, send the information to the family, or I want to help them with a $500 Home Depot card. It's not that you have to do it, but we have investors feel also that this investment fulfill them so much that they all keep helping families, even though that their families are doing fine.
Yeah, and I love that because a bank would never do that. Like a normal mortgage with a normal bank, the bank is never gonna like give a Christmas payment or give a $500 Home Depot gift card to help the family. And I think, when you look at the banking industry and the mortgage industry, I think it really is kind of a model of almost like coercion. Like if it's more like bad reinforcement, negative reinforcement. If you don't make a payment, we're gonna take the house away, or if you don't do this, then we're gonna do that. But there's never a much positive reinforcement. When someone's on time with their mortgage, they're doing well. I've never heard of a bank that reaches out and says, "Hey, good job. The next one's on me," or like, "Here's a $500 gift card to help with things." So it's kind of like benevolent banking. That's one of the things I really love about it, because I think that actually creates a better relationship with the family. And I think it does get rid of some of the risk, because you're operating now on relationship and goodwill and trust and support, rather than being this mysterious bank that the family is like, well, we don't really even know who these people are. So if we don't make a payment, it doesn't matter to us. I think it creates more of a connection where they want to, for their own family, obviously keep the house in good condition and build wealth with it and keep up on payments, but also because of the relationship. I think if they've got a relationship with me as the philanthro investor, they're going to even more have that desire to do a good job with the house. Hey, what's up? Jerry here. I just wanted to give you another reminder. Grab my book, Blueprint to Financial Freedom. It's going to be one of the best books you have ever read on finance. I can promise you that. You're going to love it. It's also a free offer. So if you go to jerryfetta.com/B2F promo, you can get that now.
Yes, that's exactly it. Some of those families even recommend more people. Like, they open like, hey, we have such a very good experience with Easy Homes, and they just refer coworkers, they refer friends. So just in case if we have more properties on that area, they can go look at them and then keep expanding and helping more families. So it's very nice what we do with families. I'm very happy.
That's cool. Kind of a random question, Tony. Have you guys ever had a family that started as a family in a house that ended up becoming a philanthro investor?
We don't have one that became an investor, but yes, we have one story that is very good, because the investor family purchased the property for around 50 something thousand from the investor. The investor purchased the property for 42. The family the family pay off the loan. And I think on year 3, the family pay off the loan. They got credit, so they liquidate principal balance. And what we see is that after that, the family put a house on the market, and it was for 268,000. And those are the things that you see on the property, and investor, pay off. So the investor got his money and everything. He got his equity gain. And then the family So those are the things that can happen here. You as an investor can do it as well if it becomes vacant on the property. But if when that family paid off the loan, the house that they have is so beautiful, and we can show you, later. We can show you pictures from before and now how it's
Mhm.
the property now on the market, and it's a very different house. So it's a very nice.
Wow. That's a
And they
life-changing
became an
story.
investor, but it changed their life so much because they came from not having an opportunity to purchase a home through a
Mhm.
traditional mortgage, that making over 268,000 from a cell phone
Wow.
for the house. So
Yeah.
that's a life that was changed.
That's cool. So then one of my goals, Tony, is I want to, as I continue adding more homes, I want at least one of my families to become a philanthro investor. That's going to be one of my goals, is to help them, do the same that was able to be done with them, and help other families do the same thing. So maybe with my families, we can send them a copy of the philanthro investing book or something like that. But that would be a cool goal, is to have one of them graduate into the next level of it.
From zero to an investor.
Yeah, exactly.
Let's do it. I like it.
Cool. So what's next? And for those watching, I'm actually doing this through my life insurance policy, through my Sacred account. So I'm becoming my own banker by depositing money into my banking system. I'm borrowing against that deposit, just like we teach, and then I'm using that to acquire this property, right? And so the income, the cash flow that I'm getting from that, every month I'll pay it back into my banking system, and it's going to continue to build, and that's then going to fund the next one, and it's going to be the same process over and over. So I'll be making the return that Tony showed us today, but at the same time, I'll be making the return on the money that still grows in my policy while I'm using it. So it's a very cool way to go about it. But on that note, Tony, what is next for us?
So now after we select the properties, we're gonna start creating the contracts to send them to you. Once the contracts are signed and executed, then you will start collecting the payments from the family right away. Once you will be receiving every month, you will be receiving an investor report. You
Mhm.
will have all the information from the family, how much was the monthly due, how much was collected, and you will see the returns over there. You will see a marketing overview on your investor report. That is the first page, and that will give you, like, if the property was vacant or there's any vacant property, you will see the activity on leads on that house on the first page. On the second,
Mhm.
you have the monthly basis, the report as on a monthly basis. Then you have another third part that is on a yearly basis. And the fourth part that is like your account. You will see the escrow account. You will see everything that goes in and out from your account. So what I
Mhm.
recommend is, once we finish on that we select the property, we just go move forward with the contracts. Obviously, make sure that you don't have any other questions. Make sure that you understand. I always send an email after we select the properties and the communication to have all my information. You have my personal number, obviously my email. Uh, like I said, I'm always available, even though that is after times or after hours
Mhm.
from work. I'm always
Mhm.
available. I can be available Saturdays or Sunday as well if needed. So I just want to let you know that communication is very key. So that's part of like what I always do with our investors. So other things that I would like to say is that it's very good what you're doing with your Sacred account, and but also that's good for everybody to know that it's a very good way to invest. And we also have other types of funding. Like if there's an investor that have an IRA, they can use an IRA to fund to buy a property with Equity Help, or three or four or five as well with 401k. Also, they can do it. They can invest here on with Equity Help. That is, there's many ways that we can help them. Even with Bitcoin, we have with crypto that we can even purchase the properties and make any transaction with Bitcoin as well. So just in case
Wow.
you have different options in there to fund your Equity Help escrow account. Okay.
Very cool. Very cool. And that's the next step for me, guys. So I've already read the book. That's one of the prerequisites. I read the book. There's a presentation, kind of a course that we'll have philanthro investors go through. I've done that, right? And then the next step for me is funding the escrow account. So an escrow account, it's kind of, if you've never done a real estate transaction, it's kind of like a middle account. Like you put it there as proof of funds. If I'm like, hey, this property, I decided I don't like it, I'm able to get the money back out very easily. But if I decide I'm moving forward with it, and it looks like I'm going to be moving forward with it, right? That shows Equity and Help and Tony and his team. Okay, great. Jerry actually has the money for the property. We can reserve it. We can take it off the list for other investors to look at. And then once the deal is closed, the money transfers from escrow to equity and help, and that deal is now done. I've secured my property. I've put the investment capital in, and then I've got another escrow account, Tony, which is what you're saying my income payments will pay into, which is the one that goes to me, and I can decide where does that money go as it comes in.
Correct. You can either leave it on escrow account or you can just use it on every month. Most of our investors leave it on account. It would depend the strategy that everybody wants to, that everybody wants to use. But most of our investors keep the money on escrow so they can keep expanding their portfolio and start like compounding those properties and have more and more. We have investors that have started with three, and in a very couple of years, they already have seven. In a few years,
Mm,
they already have 5 or 7 properties with the same income
mhm.
doing with equity and help and some extra money that they can send. So yeah, those are the things that we have to move now.
Very cool. Good. Well, I think I'm good on questions for now. I know you've got some paperwork to work on and send over to me.
Mhm.
And then I'll be, for those watching, I'll be requesting my policy loan next. I'll do that today. Requesting the loan, getting that through so it's in my checking account so I can then send it over to escrow with Tony and get this deal done.
Correct.
Awesome, Tony. Well, anything else you want to cover today?
Um, I think that we have covered most everything of what happened after the properties are performing. That we will be working with the family. You don't need to be contacting the family, or you just have to sit back and relax. That we do everything for you. We take care of the collections if there's any eviction. We have a department that is a family rep that takes care of families to help them anything with the city, anything regarding. So we're a company that we help the families, we help the investors, and we are very attached to those families. And after that, we continue collecting the payments. And if there's any questions, I will always be here in order to help and figure out those answers for you.
Awesome. Well, thank you so much, Tony. I'm looking forward to the next steps.
Thank you so much.
All right. I'll talk to you later.
See you there.
All right. Bye. All right, guys, so that is the first step here as I'm getting this property done. As things progress, we're going to keep you posted. Again, if you're watching and you're a client of Wealth Dynamics, or maybe you've been watching and following for a bit and you're like, man, I really want to get into real estate investing, this is a great way to do it because you've got control over a property, right? So the money that I'm putting down, I'll be putting about 61,000 into this. It's not like I'm lending someone 61,000 and hoping and trusting that they're going to pay me back, right? I don't want to do that. That's a good way to get burnt. Instead, I'm buying a property. And so I've got security there. I've got an asset. I've got collateral. And if that property, that family, for example, let's say they don't keep up with the property, I can have it taken back and recuperate my money through the value of that property. I can relist it. So I've got a lot more security on the downside. On the upside, however, it really does help society, right? This is not about, taking the same sick game that the banks have played with us, right? Putting their thumb on us, suppressing us, squashing us, tying us down to a mortgage, seeing how can they get the most out of us and give nothing in return. It's not that game at all. This is the game of help, right? We're going to actually learn the system and use it to help people rather than learn the system and use it to further enslave people, right? So what that looks like is it's a fair price for a family on the purchase. It's a minimal affordable down payment because I want them to have enough money to continue to fix the house up, right? I want them to be able to improve the property. I want the value to go up. I know I'm going to make, you guys just saw 13% on my money, 13.5% on my money, which by the way, there are not many things I can think of and show you that are going to pay me 13.5% on a scheduled, agreed upon basis, right? Now, if I add my policy to it, my sacred account, if I'm earning 3 to 5% on that, let's say I borrow and my loan interest is 2, 3% as well, I've got an additional 1 or 2% profit there on top of that. So I'm making 13.5%, plus I'm making an additional 1 or 2%. So I'm making 14 to 16% on this deal. Very low risk for me, right? It's something I'm very interested in. It's something that meets the clothe your capital checklist that I talk about. So before I looked at this, I'm like, okay, good. Let me look at the clothe your capital checklist, right? Do I like this deal? I do. I like real estate. I like banking. I like lending. I like helping. I like people. So I like this deal. Do I understand it? I'm going to buy a house at this price. I'm going to put it on the market for that price. I'm going to collect a down payment of $1,000 or $2,000, and the balance I'm going to charge 12% interest for 20 years. I understand that. That's easy. If they move out, equity and help is going to help me with the process of getting a new family in and starting a new loan, just like any bank would. If they stay in, they just keep paying me as agreed. Right? In best case scenario, their credit improves because they're making mortgage payments with me and that helps them, or the value of the home goes up because they're holding the equity there and they're putting sweat equity into appreciate it, right? And they're able to refinance or sell and cash me out early and I can redeploy with another property. That's best case scenario because that changes the family's life and I get the money anyways. So I understand the deal. Does it fit me? Right now, my main concern, my main focus is passive income, right? Like I'm someone where I'm financially independent from business income, investment income, but I want to increase that. I want my standard of living and the standard of living for my family to go up. Therefore, I want more passive income. So to be able to put in money like this and say, great, it's going to give me a 13.5% yield on my money, that does fit me as an investor. I like tangible, I like control, I like downside protection, I like real things, I like helping. Like these are all things that fit me as an investor. I'm a bit more aggressive, right? But I'm not too aggressive. I'm not someone that's going to go speculate with cryptocurrencies or stocks or those types of asset classes. So it does fit me as an investor. Does it fit my purposes? Absolutely. The passive income is what I'm focused on right now. And that's why when I'm looking at this, I'm not like looking at, okay, I put in 60 and I'm trying to make 30,000 in equity. That's not the game I'm trying to play. Okay, if I was trying to play that game, I would just buy my own house and hold it and let it go up in value. I'm looking for income right now. And I'm looking for income that's as passive as it can possibly be. I've already got a business. I've got a family. I'm busy. I'm not looking for more things to devote my time to. Right? I'm trying to free my time up, right? So usually equity equals time. I've got to put in time. I've got to be involved in order for there to be more equity. Income, on the other hand, I can get through this format, which is the same thing banks are doing. Banks are not involved in the day-to-day life of your home. I don't want to be involved in the day-to-day life of this family's home, right? So it fits my purposes. Now, the last couple ones, right? We've got to look at, is it actually like a life essential? Is it vital? People need housing, so yes, right? People need housing. Now, the other thing is during a recession, this demographic, this family, they're not usually the ones that are impacted in a recession. Typically, upper middle class would be, or mid, like smack dab in the middle of the middle class would be. Lower middle class, lower income, usually they're not going to experience a difference. If the economy is up or down, it doesn't impact their life very much. Right, a mechanic is the husband here. A mechanic, he's going to have cars that need to be fixed, whether the economy is good or bad. Right, like so, there's some downside stability there, and I like that from an essentials standpoint. Next is the pricing. Is it overpriced? Anytime I can buy a piece of real estate for less than $100,000 and make 13.5% on my money, that's good value, right? I'll make a lot more value than what I put into it. Okay, and then finally, the last piece is control. Do I have control over the asset? I do have control over the asset. If something happens and that family is not paying, I do have the ability to take the house back, right? I also have positive control, right? I can reward them for good behaviors, not just reprimand them for bad ones. So that gives me positive control where they have a lot of willingness to work with me. So this is a different style, a different flavor of real estate investing. This is not buy a rental and create another renter. This is not try and get a house and pay as little as possible and then rip someone off when I flip it or wholesale it to them. It's none of that. This is true help. That's why I love it. So stay tuned. Next is contracts. Next is escrow. We're going to get into some of the nitty gritty on this deal. Thanks for checking this out. Hey, this is Jerry Fetta here. I want to thank you for watching my video, watching my content. I hope you enjoyed it. If you would like to learn more about the blueprint to financial freedom and how you can achieve passive income that exceeds your savings, your expenses, your taxes, your generosity, and build wealth like the top 1%, I want to encourage you, grab a copy of my book, The Blueprint to Financial Freedom. You can go to jerryfetta.com/B2F promo, or you can click the link in the description of the video here. The copy is free. You cover your shipping. We'll send the book out to you, and we'll send you an email with a bunch of great bonus material also for free. Get the book, subscribe to the channel. I'll see you on my next content.